Welcome to our exploration of technical analysis. Are you here as a skeptic of TA? A non-believer? Or perhaps someone who is unfamiliar enough to know what you believe? Spend the next few minutes with me, and by the time we are done, you will see there is no logical answer to your question: is technical analysis real? Other than absolutely, I need to learn to do it myself. Like others who post charts and technical insights on mainstream message boards, Green Gobbler is a common target for negativity toward the practice of TA. Questions about the nature of technical analysis are always valid. However, there are only two reasons people discount the reality and usefulness of technical analysis. 1. They don't know any better or have attempted TA without success, or 2. They have disingenuous motives that involve denigrating this trading methodology because it benefits them or their employers to keep the retail market in the dark. Here is a concise definition of technical analysis. It is financial analysis that uses patterns in market data to identify trends and make predictions. Similar technology is used in business, marketing, and many other industries to make sense out of historical data. 21st century technical analysis is quite different. Fundamental theories like Elliott waves still apply, but the evolution of computer algorithms and availability of TA tools has dramatically changed the way in which markets operate. Consider this headline from an October 2019 article in The Economist. The stock market is now run by computers, algorithms, and passive managers. According to Deutsche Bank, 90% of equity futures trades and 80% of cash equity trades are executed by algorithms without any human input. Algorithm trading is facilitated by computer programs that are structured to respond to market conditions in an if-then manner, such that trades are executed when an investment asset reaches a particular price point or other threshold. You might ask, how are these price points and conditions established by the big money players that operate the vast majority of these programs? The answer is through analysis of historical data and patterns, and even with insight into financial conditions and mitigating factors that retail traders do not have the ability to access. Technical analysis is not about achieving guaranteed success with your trading. That is a virtual impossibility for retail traders in a system where big money makes money by outwitting ill-equipped, emotional and unprepared retail traders. However, when effectively performed, technical analysis offers far greater accuracy in position entries and exits, allowing you to better optimize profits on winning trades, and avoid or quickly get out of losing trades. Consider why so many spam accounts exist on mainstream message boards, many of which primarily attempt to debunk the value of TA, and those who do it well. The ability of big money to control and dominate the markets is best served with a market that ignores data and tools that are readily available. These power players rely on human emotions, such as fear, exuberance and uncertainty to influence your trading behaviors. To deny the existence and usefulness of TA is to deny what your eyes and mind can clearly discern given time and effort to do so. Here is a basic look at some of the many standard investment chart patterns that have been identified for many years. These patterns are obvious and consistent across charts in all major publicly traded financial markets around the world. TA exists beyond charts as well. We see an orderly nature to patterns in many places, including technical indicators. Though somewhat rudimentary, there is no denying the orderly up and down rhythms we see in price strength indexes and momentum studies, which generally align with price flow over time. And, of course, we have the well-known Fibonacci ratio levels of support and resistance, which are also constant. Here are a couple examples from the same chart segment. Notice the 61.8% retracement on the initial down move, and the subsequent 78.6% retracement on the next major up move. In contemporary markets, many institutions and traders use charting and technical indicators to make entry and exit decisions. This collective activity itself contributes to the production of the patterns you see play out. Some try to denigrate technical analysis by labeling it as self-fulfilling prophecy, meaning the patterns are based on behaviors that exist to fit the collective beliefs of those who use technical analysis. The reality is, much of human behavior is connected to our beliefs and attitudes, and their contributions to self-fulfilling prophecy. In assessing the merits of TA, it doesn't matter Traders who recognize the usefulness of the same types of analyses done by large financial institutions around the world, are in a much less disadvantageous situation than those who deny its existence or impact. Hopefully, you now recognize that financial market technical analysis is legitimate, and it is carried out every day at financial institutions around the world. Arm yourself with technical analysis abilities to level the playing field for retail traders. Join our collaborative AvantGardeInvesting.com community, learn and grow together while exploring both conventional and radical, unorthodox, groundbreaking technical analysis.